Hey everyone, John Henry here from support@schooloftrade.com, and today we're going to be taking a look at the average volume indicator. Now the average volume indicator is this guy right down here, and basically what we're going to use it for is to look at, whether come 8 o'clock in the morning, is volume higher than yesterday or lower than yesterday? And that's basically going to be able to kind of give you a forecast of, are you expecting today to be a little bit better or more price action oriented than yesterday? So as an example, yesterday was pretty slow, but what we can do is come 8 o'clock, and what we'll do is we'll just scroll back to about 8 o'clock, and it looks like 7:59 is close enough, and it looks like we've got 294.28. So what we want to do is look back and say, okay, well at 8 o'clock, right now we've got 294.28. Is this higher than yesterday? So what we can do is we can scroll back to yesterday at around 8 o'clock, and then we can look at what that was. So looking at 8 o'clock right on the nose, right here it's 292.16. So we are marginally higher, but we are higher than the previous day. And what that basically means is that there's more volume coming into the market than there was the previous day. And what you can do is you can load this. Right now I've got a 233 tick chart. But you can load this on a 5-minute, a 10-minute, anything like that. And minute charts usually look a little bit smoother. So this is a little bit of a more accurate way to look at it. So at 8 o'clock yesterday, or I'm sorry, 8 o'clock today, we had 541.96. And yesterday, we had 595. So in this case, we're almost flat. It's almost the exact same number. So we should be able to look at that and forecast, okay, well, if the volume's about the same as yesterday, and yesterday was pretty slow in terms of actual contract traded volume, then we're probably going to be expecting a little more volatility today. You know the old saying, as the cat's away, the mice will play. And that's basically the biggest factor with this. Now, what you can do with this is using it in that sense. If it's below yesterday, or if it's slower than yesterday at 8 in the morning, I want to be really careful until we start bringing that back up. Until volume starts to become a little bit more than yesterday and higher, I want to be really conservative. If I'm trading 5 contracts, I want to trade 2. If I'm trading 10, I want to trade 5. I want to kind of cut my position in half just to be a little more conservative. So that's basically the way that we're going to be looking at using the vol average. Now, the indicator itself can be found right in the master download in your members material. And if you look at it, we've got just some pretty basic settings. Now, this period right here, I have it set to 1440. Now, there's nothing special about 1440. I just wanted a really big number. Now, 1440 happened to be the amount of minutes in a day and all that. So there is a little bit of math behind it. But outside of that, I mean, you could set this to 3000. You could set it to 5. Either way, as long as you're higher. Now, preferably, this would be a bigger number just because you want to see a more average of it. You don't want it to be swinging up and down like a stochastic, as an example. You want it to be a little more smoother than that. So now, the threshold itself, I don't really worry about that. The 400, as far as the threshold goes, usually it's going to be right around there anyway, and the threshold doesn't make that much of a difference. So I just leave it where it is at 400. Now the average itself colors itself whether it's up or down. So this average volume red, that doesn't make much of a difference either. I personally don't use these standard deviations, and you can see that I have it set to false. So outside of that, that's the basics of using volume average to kind of forecast what the day is going to look like. So if you have any questions, feel free to send an email to support@schooloftrade.com, and we'll be sure to get back to you as soon as we can. Have a good one. Bye.